Welcome to the Explainer. Today, we're getting into the playbook of a marine robotics startup that pulled off an absolutely landmark deal and how they used it to secure millions in funding. Honestly, it is a masterclass in deep tech strategy. So it all kicks off with this number, 47 crore rupees. Now, that is the value of a massive order from one of the world's most demanding customers. And let me tell you, for a startup, a number like this, it changes everything. And that customer was, you guessed it, the Indian Navy. Think about that. This one single contract was the ultimate validation. It proved their tech wasn't just some prototype sitting in a lab. No, this was the real deal, a battle-tested, world-class solution. And right on the heels of that massive order, you get this number, a pretty significant round of follow-on funding, which added to a previous 10 crore raise. So the big question is, why did investors suddenly jump in right after this deal? It's because this capital wasn't a bet on some far-off dream. It was pure fuel for an engine that was already humming along nicely. See, this wasn't money to build something from scratch. It was money to scale what was already proven to work at the absolute highest level. All right, so let's really get into it. How on earth did a small team from Kochi land a deal that most companies can only dream about? We are going to unpack the exact signals and the strategies that made this whole thing possible. Okay, so to really get how they pulled this off, we've got to rewind. Let's go all the way back to the beginning, to that one spark that started everything. So the whole company was born from a very real and very costly problem. One of the founders, who's a marine scientist, actually saw a ship collision firsthand. And the inspection of the hull underwater, it took days, all because they had to get divers organized. It was slow, it was super expensive, and honestly, pretty dangerous. He just knew there had to be a better way. And this is where it gets really good. The team itself is just a textbook example of founder market fit. I mean, you've got one founder with that deep domain expertise in marine science. He gets the problem inside and out. And then you pair him with another founder who has a background in industrial automation from a major robotics startup. He knew exactly how to build the solution. It's the perfect match. So, you've got the right team, you've got the right problem. Check and check. But as you know, success in a field like this, deep tech, it doesn't just happen overnight. It's a long, patient climb. It's all about earning trust, one careful step at a time. I mean, just take a look at this timeline. This was not some fast and furious blitzscale. Not at all. This was a nearly decade-long, super deliberate climb. And what's so smart is that you can see how each step, from the first prototype to that initial funding, was specifically designed to de-risk the company. They were building credibility long before they ever walked into a major VC's office. Okay, so their first huge win, this was absolutely crucial. Back in 2019, they landed India's Defense Research and Development Organization, DRDO, as their first commercial client. Now, for a defense tech startup, that's like a consumer app getting the top feature spot on the App Store homepage. It's just an incredible signal of trust and pure technical skill. And they didn't stop there. They basically doubled down on that exact strategy. They got into the IDEX program, which is a government initiative to boost defense innovation. And look, this wasn't just about the grant money, not by a long shot. This program gave them a direct line, a pathway, to their most important customer down the road, the Indian Navy. So they've built up all this hard-won credibility. The next question is, how did IROV actually structure their business to make money and convince investors that this wasn't just a project, but a truly scalable company? And what they did here was just incredibly clever. They ran with a dual business model. So for the big commercial guys, think Tata, Adani, they offered robotics as a service. Basically, they sold inspection services. Why? Shorter sales cycles, recurring revenue. Smart, right? But then for government and research clients like the Navy, who obviously need their own in-house gear, they sold the hardware directly. Two different customers, two different approaches. And this long, patient strategy, it really clicked with their early investors. For a fund like Unicorn India Ventures, who was in before the huge Navy deal, their bet was all about deep tech patience. They were backing founders they knew had the grit to survive those long, painful R&D cycles to build something that was truly defensible. Now, for the new investors coming in, like AWF funds, that Navy deal completely changed the game. It confirmed a really powerful investment thesis, national security.
Suddenly, they weren't just looking at a company selling robots. They saw a company that was securing critical national infrastructure. We're talking energy pipelines, ports, subsea cables. That is a market with massive, massive barriers to entry. So, by the time IROV went to raise that 13 crore, their story was practically bulletproof. They could walk into a room and say, look, the Navy deal, that's our moat. We're perfectly aligned with national policy. Our tech has a unique edge no one can match. Oh, and by the way, something almost unheard of for a hardware startup, we're already profitable. It was just a perfectly de-risked pitch. Okay, so what are the big lessons here? If you're a founder out there, especially if you're trying to build something really hard in deep tech or hardware, what can you actually take away from IROV's amazing journey? This is one of my favorite parts. This table basically shows how they systematically shut down every single reason an investor might say no. Imagine the investor thinking, is the technology a risk? Boom. Here are 150 successful projects and a contract with the Navy. Well, are you too reliant on one big government client? Nope, we're diversified across private sector giants too. They just had a rock-solid, compelling answer for absolutely everything. And when you put it all together, it boils down to this clear tactical playbook. This is the checklist distilled right from their success. It all starts with your own expertise, your domain knowledge. Then you go after that one impossible customer that gives you all the validation you need. It's about building a real, profitable business that also happens to align with the big national trends, not just, chasing the next round of VC money. And that really brings us to the single most important takeaway from this whole story. In these tough sectors, hardware, defense, critical infrastructure, that old Silicon Valley mantra of growth at all costs, it's just wrong. It doesn't apply. The name of the game is credibility, period. And so, that leaves us with one final question for every founder watching this. What is your company's Indian Navy? Who is that one customer, that one partner, whose stamp of approval is so powerful, so undeniable, that it de-risks your entire business for everyone else? Find them, and then focus every ounce of your energy on winning them over.